So then you go to Grayscale. Grayscale is it's a closed-end trust or a closed-end fund, which means that they're unable to sell the Bitcoin to buy their own shares. So I feel like we're at an inflection point. It's a point at which you have the most information to conclude that Bitcoin is a differentiated international asset, store of value, and digital commodity, and unique in the world and useful to the world. You have the most information to conclude that. And yet, the ability of the retail public and the ability of institutions and governments is still largely impaired to act on that. It's very difficult for a retiree with a pension fund to make an investment in Bitcoin. It's very difficult for a large corporation to invest in Bitcoin. It's difficult for a sovereign wealth fund. It's difficult for a government. It's difficult for a hedge fund. And so you have an example where you know where the world is headed. You know what the world needs. Rational people will eventually get there. You also have a list of reasons why it's difficult, right? Why is it difficult? It's difficult because the accounting is indefinite and intangible instead of fair value. So that combined with the regulators endorsing it, the CFTC and the SEC, combined with the tone the tone and treatment of mainstream media.
This week, the crypto community is abuzz with discussions about Bitcoin's 21 million supply cap and the potential for its alteration. On September 4, in his social media exchange, software developer and Bitcoin Core contributor Peter Todd expressed his belief that in 10 to 20 years, the idea of a hard fork to add a small tail emission may not be so controversial anymore. Todd's remarks ignited a flurry of reactions from crypto aficionados who took issue with his statement. Asset management firm Bernstein has predicted that the U.S. Securities and Exchange Commission, SEC, will approve its first spot Bitcoin exchange-traded fund, ETF, between mid-October and mid-March next year. The firm's analyst believes that the crypto ETF opportunity won't just stop at Bitcoin, but will extend into multiple crypto assets. Global investment bank JPMorgan expects the U.S. Securities and Exchange Commission, SEC, to approve multiple spot Bitcoin exchange-traded funds, ETFs, at once instead of giving one company the advantage of being the first. The bank's analyst explained that if the securities regulator wants to defend its denial of Grayscale's Bitcoin ETF conversion proposal, it would have to retroactively withdraw its previous approval of Bitcoin futures ETFs. Such a retroactive withdrawal would be very disruptive and embarrassing for the SEC, cautioned. Roman Storm, co-creator of Ethereum's Tornado Cash, pleads not guilty on money laundering and hacking case. El Salvador's Ministry of Education partners with MagPrimer Bitcoin to introduce Bitcoin education in public schools by 2024. Let's continue our discussion with Michael Saylor.
When the solutions, when the rails go in place, then there's a huge amount of capital that will flow against a limited supply. So you have, if we look at the demand side, my description here is buying Bitcoin is like buying a beautiful house, in a foreign neighborhood, and you have to pay cash up front, and it takes you a year of work to do it. Whereas buying Bitcoin via spot ETF is like buying the same beautiful house in your neighborhood with no money down tomorrow. And so there are many, many people that will not buy a house if they have to pay in cash, even ever, right? Like there are many people that will never, ever buy a house in cash. One could say the great majority. And there are many people that will say, I would pay 20% more for that house if I could finance it at the bank. So we have a large pool of capital that would love to be in the space, but they can't easily do it without things like Bitcoin securities or spot ETFs. And so that's going to be a big catalyst for demand. And we already know it's coming, and it hasn't come, which means it has not reflected itself fully in the price. Now, on the other side, we have two facts about supply. We know that there will never be more than 21 million Bitcoin. That's the overarching important first order fact. And the second order fact we have is that there's a halving coming that will cut the supply that the miners have available to sell in half, and that's nearly $5 billion a year worth of supply. And then we have a third order fact. The third order fact is, if large institutions can now comfortably own Bitcoin on their balance sheet, they're going to buy it and hold it forever, and the people that hold it now aren't going to want to sell it. So the supply available for sale from existing holders is going to decrease. The supply available for sale from miners is going to decrease. And yet the demand to purchase it will increase. And the duration, right? The amount of time that someone wants to hold this asset is going to is going to increase. If you decide to buy Bitcoin and hold it for a year, then that means every year 10 billion is being bought and 10 billion is being dumped on the market. But when you decide to buy Bitcoin and hold it for a decade, that means every year 10 billion is being purchased and 1 billion is being dumped on the market. So all of these things put together, they increase the demand, they stretch out the duration, they decrease the supply, and they decrease the friction to anybody to act in the favor of the network. So put them all together, and the summary is never been more bullish.
Feel free to join us as we explore the unfolding events.
You're an individual, and so you believe being a sovereign individual, so you buy Bitcoin and you hold your own keys. Okay, good. Now you get married, and now there's two of you, and one of you doesn't want to do the work, so the other one takes responsibility, and so now one of the two of you in the marriage holds the keys. Okay, that's a family. A family should be able to do it. And then you have, so then you have 4 kids and 16 grandkids, and the children are 3 years old, and you're going to hold some Bitcoin for the 3-year-old. And then eventually you have grandparents and they're 85 years old and they don't use computers that well. So now the family becomes an extended family with 28 people, and perhaps 2 people or 3 people hold the keys. So now you've got a little Fetty man, or you've got a multi-sig, the family treasury. What do I say to the people, the 85-year-old, the family that says, I want to hold my own keys? Well, my answer is, they're not saying it, right? Like the 3-year-old and the 1-year-old and the 85-year-old is not complaining that, their 2 sons or the mother and the father hold their keys, right? Any more than I didn't complain that my mother and father had the car keys when I was 12 years old and I didn't get the car keys. The answer is, families are going to have there's a custodial relationship, right? You're the mother and you have 6 kids and you have the car keys and they don't have the car keys, and you drive them to school in station wagon. That's custodial. Like, what I have to say is that's fine, right? It's okay to be an individual. It's okay to be a couple. It's okay to be a family. Now, after that, you're a school. Okay, so when your school actually has 400 people in it and an endowment, and it's a private school, and they have a multi-sig relationship, and there's 3 people or 5 people on the board of directors that hold the keys, is it okay that the 500 parents don't? Is it okay that the 500 kids don't? Okay, what about the country club? What about the church? Is it okay, that 10 people hold the keys for 1,000 people in the church? Now you get to the city. Well, what about the city wants to have a Bitcoin endowment? Do we give the keys to the mayor of the city? I wouldn't. I mean, I think that maybe the city council might have a multi-signature thing, but there's going to be a custodial relationship there.
And that concludes an insightful episode of Money Tail Case. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.